What about obligations with a reverse mortgage? Certainly, there are requirements and there's stipulations. So, what do people need to know? What kind of obligations do you have when you have a reverse mortgage loan?
Yeah, like any other mortgage, you have to pay your homeowner's insurance, you have to pay your property tax, and you have to maintain the home. So you own the home, right? And that's a misconception. We'll probably get into that a little bit. You still own the home, and so the property taxes and the insurance are your responsibility. Those are the three rules of reverse mortgages, right? Insurance, taxes, maintenance, and upkeep of the home.
Got it. And so, and you did say this a little bit earlier, but I'd like you to elaborate on, do you have to repay the loan? And what are the options associated with that?
Yeah, so it is a loan. And so it does need to be paid back. And that loan comes with an interest rate. Reverse mortgage interest rates are on par with traditional interest rates. Currently they're in the mid fives. These days, maybe even in the low sixes. But the loan has to be paid back. The key with reverse mortgages, Kelly, and you know this, right? It's the flexibility. So you can choose as a reverse mortgage borrower to make payments as you go, and you can treat it no differently than a normal traditional mortgage. Or you can choose to defer payback, principal, interest until you leave the home. And in that case, what happens is the would-be payment every month, instead of you making it, it gets added to your balance. So your balance is increasing over time, but you're not making a payment as long as you live in the home, so long as you meet the obligations of the loan. When you pass away or when you permanently leave the home, that is when the reverse mortgage comes due and payable. And at that point, the loan has to be satisfied.
Got it. Yeah, great explanation there, Stephen. So if after the couple passes away, what happens to the home? The loan is paid off, and then the remaining balance then goes to the heirs. Is that correct?
Yeah, so the home can be passed on to the heirs no different than if you had a mortgage, a traditional mortgage, or whether you didn't have a mortgage, right? You decide who the home goes to. If you pass the home to the heirs can decide, do they want to keep the home and buy the home? Do they want to just walk away? The beauty is, let's say you're in a reverse mortgage, Kelly, and you decide to defer all payback until you leave the home, right? And let's say the value of your home drops over time, hypothetical. But your balance is increasing because you've chosen not to make monthly mortgage payments. If you ever get to the point, Kelly, where you owe more on the reverse mortgage loan than what the value of the home is, your heirs have the option to simply leave the keys on the kitchen table and walk away. And that's powerful. These are all non-recourse loans, which means that no debt, you're not personally liable for any debt. You, your heirs, your estate, you're not personally liable for any debt on the reverse mortgage. And so if the heirs sell the home and they profit, that's their inheritance. But if there's more owed on the reverse mortgage than what the home is worth, they can just simply walk away.